think just a bad earnings season is going to drive people off the bus. I mean, this reminds me a lot of 2000 to 2003 when we had a lot of those companies that were partying coming off the 90s that were just reckless and did a lot of things wrong for shareholders, and also the portfolio managers out there at the various mutual fund and ETF companies, back then mostly mutual funds, were buying the same stuff. If you looked under the hood, everyone bought Intel, everyone bought Cisco, everyone bought the same stuff. And this is what we're doing right now.
Welcome back to Metals and Miners. I'm your host, Gary Boehm, and today we're plunging into the electrifying world of gold, silver, and the booming mining sector. I'm excited to introduce John Feneck, founder and CEO of Feneck Consulting, whose decades of experience from Wall Street giants like Merrill Lynch and JP Morgan Chase to his proprietary methodology have made him a trusted voice for investors navigating the metals and mining landscape. With a keen eye for undervalued opportunities and a pulse on market trends, John has guided clients through gold rallies, silver surges, and the rise of junior miners with remarkable precision. John, it's a privilege to have you on Metals and Miners. Welcome back to the show.
Thanks for having me again, Gary. It's good to be here a second time.
All right, John, let's begin with gold prices having surged over 25% since Election Day. Several analysts have highlighted the compelling buying opportunity in the mining sector due to the gap between gold prices and the gold mining stock valuations. Despite the commensurate rise in mining stocks since January 1st, do you still see this divergence as a significant opportunity today? And what previous time period do you compare this one to?
A lot of stuff in there. I would say that gold's rally here is sort of like on its own, right? Because gold is telling you something as an investor, regardless of what you're invested in, which is there's something wrong with the world, you know? And if you don't believe that, you need to do some more homework, right? Because Ray Dalio, a lot of smart people are saying this that are billionaires, and you need to get on board with the narrative before gold goes to 3,500 or 4,000, and you're just going to be chasing. We call that, FOMO, fear of missing out, right? And it's happening right now in mining stocks, which we can get to in a moment. I can see it in the charts. I can see it in the day-to-day action. A stock I own a big position in today had $100 million non-dilutive debt financing out of nowhere. The stock's up 18% in one day. You can't make this up. This is happening. And so number one, gold's rallying. That's on its own. Silver, which we'll get to in a moment, is, the most frustrating commodity in the large commodity sector. It'll do whatever it feels like doing. Yesterday, up 5.3% out of nowhere, right? Like, this is what silver does. Now we're knocking on $35 an ounce all of a sudden, when most of my peers were saying, yeah, we're going to break 30 to the downside, right? It's like super negative people in our sector, Gary, that don't understand charting. So, when you break through 30 on silver and it was 11 years of resistance, that's really meaningful. And so that's our biggest position in full disclosure. I mean, we believe in silver. We believe that silver miners are going to take off once silver breaks 35. That will be the catalyst.
Not to mention the all-in sustaining cost for silver mining companies was fairly high. So, I mean, if it fell below 30, a lot of those were going out of business.
They're really going to struggle if they didn't get a lifeline, right? Or do a royalty deal or something, to just survive. Because it's really hard being a silver junior. I mean, forget about the mid-tiers and the large guys like Pan American for a minute. If you're a silver junior and your AISC, as you just said, is 26, 27 bucks and silver's in the high 20s, you're biting your nails every week, right? It's like this could go either way. And thank God for some of those good people that it's gone the right way, the way it should go. Because if you look at the gold to silver ratio, it said like 99 or something insane as we record this. I mean, anything over 90 going back to 1980 has been a buy in silver and or silver equities, except 2 times in, 45 years. To me, that's the highest batting average in mining or metals, is buy silver when it goes to 90 to 1 on the gold to silver ratio, or buy silver equities, which is sort of what we prefer to do.
Yeah, well put. All right, so comparing the gold market cap to the equities market cap since 1925, the ratio has shifted dramatically from peaks above 160% that was during crises to lows near 20% during bull markets. Today, it sits at a median of about 38%. Given economic uncertainties, the inflation, the debt levels, the geopolitical tensions, do you view gold currently undervalued relative to equities? And if so, do you kind of have an idea by how much?
When we recorded earlier this year, I would say yes. Now, I wouldn't say gold is fairly valued, but it's getting closer, right? I mean, gold is about a 1.5% position for us. Silver is about seven, more like eight probably now after yesterday. And so we do have positions in metals. However, um, let's just take a big round number so people can understand this math. So if you have gold at 3,000 an ounce and you go up 10%, you're at 3,300, which is kind of where we are right now. That's not interesting to us. We don't want to make 10% for clients, right? We were up 40.77 in the first quarter. We're going to kick ass this year because we're buying stuff that has leverage to gold, leverage to silver, right? We're not just buying the metals. As I just said, 8 or 9% of our portfolio is there. Great. But the real way to make money in this rally is buying stuff that you know has leverage and will survive, not make bad decisions, not take money when it's handed to you, like Alexco did a couple of years ago, and then Hecla takes them out for 43 cents at a page 40 on the Wall Street Journal. No one cares, right? Like this is the kind of stuff that you have to be avoiding as a management team and understand to do the things for shareholders as opposed to just for yourself, right?
Let's go a little deeper on that. So gold prices are driving explosive profit growth for these mining companies. Balance sheets are dramatically improving. How do you expect these companies to manage and deploy the capital moving forward?
Well, I think more companies have to do a better job of marketing, social media, presentation decks. I see misspelled words all the time. It drives me nuts. I mean, I went through spelling bees in high school, so I was kind of a nerd. But I mean, honestly, it's just like, hey, if you want a $100 million client reading this, then don't have a website that looks like it's from 10 years ago, right?
Right.
Like you have to do everything. It takes a lot of work because the junior guys out there, especially, are wearing a lot of hats. Sometimes they're CEO, a board member. They've got like one financial guy, a CFO or an accountant doing the books, like, and then maybe have 10 employees. And that's a $30 million market cap company, but it's got promise because of the deposit, right? And so then you have to say, all right, so if these 10 people don't mess it up, even if they can just do what they need to do to stay on track to get us to the finish line, I can make a ton of money in this stock, right? And so
Yeah.
that's how I kind of look at it. I look at people first, and then I look at the project second, which some people would disagree with me on for sure. But look, I mean, people lie all the time. You have to vet the people, right? And from working on the phone for 25 years before I did this, I think I have a pretty good sniff test for when I talk to someone for the first, second, third time to see if they're going to tell me something different. So I take notes, right?
Yeah.
So I don't try to trap people in a conversation, but I'm saying if you're going to tell me one thing and then your IR guy is telling me another thing and your CEO is telling me another thing at my conference, I'm worried, like because you guys don't have a unified message. So getting a unified message, get more marketing done. Gary, I can't tell you how many well-meaning geologists led companies out there have no clue about marketing, right? That's not their fault, but they have to do something about it. You can't just
Right.
drill, put out drill results 2 years ago when no one cared and expect a different result. You have to
Right.
like have a combination of good drill results with good people, good marketing, attend the right conferences, avoid the other conferences, avoid a lot of these road shows that generate no buying whatsoever. Like you have to do it all. And
John,
so that's why I think
let me ask you this. If we don't see a massive surge of investment dollars flowing into these mining companies, are you expecting an M&A cycle, a pretty strong one, to take hold if those equities aren't bid up?
absolutely. I mean, there's just too many junior companies right now. There's too many mid-tier companies. You'll see a lot of things like Mandalay is one of our holdings, MNDJF. They just did a deal with Alkane. and you're going to see a lot more of that kind of work where good companies like Mandalay, 80 million in cash, no debt. Find me a gold antimony play with that balance sheet out there because I don't think they exist.
Right.
They decided to merge, right? So what does that tell you, right? Like that tells you there's going to be more mergers of equals, more takeouts. Very exciting stuff for shareholders, I think.
Yeah, it is very exciting, especially considering how long it's been for those in the sector. Many people have given up,
Right.
you know, and they're going to probably come back in when it's a little late in the game. So GDX, GDXJ, you and I were talking about this off camera before we hit record. They're both up about 50% or more since January 1, despite largely negative investment flows during that time. What do you expect to happen to the underlying equities once these investment flows reverse and turn positive on trend?
So I think our sector is 0.1% of the global, investing universe. And I'm probably being generous, meaning that if you were to add up all the mining companies out there, they wouldn't equal the market cap of like an Nvidia, right? Like so, we're basically a sector that's very undervalued. It's very misunderstood by the investing public, by very smart people. I just did two conferences, Gary, in Florida and in Georgia. We had a bias towards, I mean, a heavy bias towards accredited investors, meaning you have to have $1 million net worth to get in. I let other people in, but really the majority of people I want my CEOs that I own sitting in front of are guys with 10, 20, $30 million, or they're institutional, right? Where they can make a difference in the share price, or they're an influencer. I really believe in the influencers today. I had Shad Marquise from the KU report at both conferences. I gave him his first speaking role at my conference. I think the guy's brilliant, and he's late 40s, busting his ass, working 16-hour days right now. And guys like that, I want to give a shot, to get more exposure. He's got a Substack like you, and we need more people like you and him in the sector that are smart and helping and trying to help clients, right? So, all that to say that GDX and J are a big part of our portfolio. I use a hub and spoke structure where the hub is GDX and GDXJ and three silver equity ETFs, not necessarily SLV, but SILJ, which is the small to mid cap stuff, SLVP, and SIL. All three of those I own as a exposure to silver producers, if you will. And then I own GDX and J for my gold producers. And then I build around that. So I'm not, I think a lot of people think like I'm a cowboy buying these 2, 3 cent stocks all the time, and that's it. We have a lot more than the average newsletter writer or influencer in large cap stuff. I think I mentioned Newmont the last time we talked, and probably close to 38 to $40. It's trading well above 50 now. We have a position there. We've got a position in Agnico. We've made a lot of money in these stocks. But I just feel that right now you have to complement the GDX and J's of the world with lower cap stocks because the micro cap stuff hasn't really moved that much yet.
Yeah. All right. So, John, given the significant capital inflow into GDX in the last week or so, it led to a creation of several million shares. And considering the recent downgrade of U.S. Treasury debt, how likely is it that this signals a fundamental shift in asset allocation by U.S. money managers towards precious metals equities?
I just for the audience's benefit, I don't get any of these questions in advance, and I won't take questions in advance. So I'm just going to tell you because I can kind of tell you where this question is going, and I'm going to disagree. I'm going to say that we're still absolutely insignificant in the investing world. That's how I feel. Because again, you add up all the stocks in the NASDAQ, the mining stocks in the Russell, the mining stocks in the S&P, we're like 0.1%. I mean, it's ridiculous. If you look at the S&P 500, because I think a lot of your listeners have significant money there, right? Their 401ks, their 403bs. It's like 35 to 40% tech. I haven't looked at yesterday's numbers, but let's just say a range of 35 to 40% tech. We're 0.1%, I mean, like we're just getting going. So when people ask me, like, have I missed it? No, you haven't missed it. You just have to be more mindful of how to play it. You can't just throw money at the sector, right? If you're buying just Agnico and Alamos and all the stuff that's already run, your upside is limited, right? You're not going to make the same returns that I would.
So what ultimately moves the money managers off of tech, or maybe even just a percentage of what of where they're allocated, and over to the precious metals mining complex that is just spitting out cash hand over fist?
So we need two things, in my opinion. This is just my opinion. One is we need tech to tank a bit to scare people, the fear trade. That will get more people into GDX and J like kind of investments, in my opinion, later this year. The second thing is a move in the US of financial advisors away from larger shops like Merrill, UBS, Morgan Stanley into financial planning shops or RIA shops, which are known as registered investment advisors. Because when you're an RIA or many times a financial planner, you don't have the same oversight, if you will, that you would at Morgan Stanley. Like Morgan Stanley, you have to buy a stock in the commodity space with $5 price or higher, right? That's very limiting. They're out there. There's plenty of good names, but the stuff that I'm buying right now and making most of my alpha from is under $1. So as an RIA, you can do whatever you want. And I have 7 or 8 clients that are RIAs strategically because I'll bring stuff to them and say, hey, you should put this in all your accounts, and they can. They've got discretion, right? So like these are very powerful people to know because look, they have to make their own decisions and what's right for clients, right? But if you've got discretion over a number of clients, hundreds of them at a time, and you say, yeah, that's a great idea. I want more silver exposure. I met with the CEO at John's conference. I'm going to put a 1% position in every client's account that told me they want commodities exposure. Man, that junior can roar because they're not ready for that inflow, right? The market makers out there are half the time asleep at the wheel. It's hilarious.
Amazing. All right. So beyond gold prices, what's the biggest risks to the gold mining sector's current rally that you believe investors really need to be aware of?
Well, part of the way we've seen a rally this year in a Trump world is through his discussion of tariffs, right? And so if we see tariffs moderate significantly, I don't see that as a positive at all for gold or gold equities. However, I feel like U.S. China is like in inning 2. I mean, most people have it in inning 8 or 9. It's a joke. This is just getting started, and you saw more of that, Gary, this weekend, right? Where
I
people are
mean,
like, "Well, wait a minute.
they're
Oh, like
clearly decoupling from each other. It's very clear.
yeah." But the headlines April 21st were the opposite. This wasn't like 3 years ago. This was literally less than 6 weeks ago, where Trump kind of came out on that Monday when the Nasdaq was up 4%, and by the way, GDXJ was down 8%, and said, "Yeah, we're good, right?" Like, come on. I mean, if you believe this stuff, if you believe in gold, you have to buy dips like that. I put out a note that day with that kind of price action saying this is a buying off. Like we have a real time service, Gary, which is very unique because I believe that most newsletter writers, while they may be well meaning, are way behind the 8 ball if you're putting something out monthly. And GDX and J are breaking out yesterday. If you're publishing in 2 weeks, I mean, as a client, you're missing the boat, right? So we talk about macro a lot through our service and how that relates to mining investing in general. And we talk about tariffs a lot, since January.
So, John, let's shift over to platinum for a moment. Platinum's trading at a minuscule ratio of just like 0.31x to gold, and it's been in a 15-year downtrend. It's structurally in a supply deficit, and yet it shows strong fundamental and speculative interest. In your analysis, what are the most important catalysts that could propel a rapid catch-up by platinum to gold, and do you see that actually taking place?
Uh, I don't see a catch up to gold. I honestly don't see that happening with silver or palladium or any of the PGMs as well. However, I do think that the gap will narrow, and here's how. What is the country out there that produces the most platinum? Do you know?
You tell me. Is it
It's
Australia?
Russia.
Russia?
Russia is producing a lot of platinum and palladium. And what they're doing is they're selling that to nefarious parties to fund their war effort. That's my thinking. I can't, tell you to look this up and that'll tell you the answer. But you can see it in the charts. PPLT is the ticker for the platinum ETF. PALL is the palladium. If you were to draw these charts, you see they look pretty similar since February of 2022. It was a spike up on the idea that Russia would be, involved in a war, and people were kind of gaming platinum and palladium to say, oh, now that's going to be really out of a lot of the world's production is going to be at risk, right? Well, just the opposite happened because what they've been doing is this war went on way longer than most people expected. and they've been funding the war effort through sales of commodities, right? And so once that stops, that's your buy moment for me to buy more physical platinum or palladium, because that would be a huge lift off of that. Meanwhile, what we're doing is we're buying equities. Stillwater Critical Minerals is one of our biggest holdings, PGEZF. Stocks at a multi-year high right now. If you're following the news with the fast tracking that Trump's team has been doing in April, they fast tracked that complex, the Stillwater complex in Montana in April, mid-April. And the stock has just gotten a new life after that. It's amazing what one press release will do to a stock like that. Sibanye is another holding of ours. We've traded for many, many years, SBSW. They are literally connected to Stillwater in Montana as one of their projects, but they have a lot of their assets in platinum palladium over in South Africa, right? So we try to get exposure to that stuff through equities. The last one I'll mention, which a lot of people don't understand has any platinum, is Power Metallic. I love Terry Lynch, PNF. Guy works extremely hard, and he's out there all the time telling the story. And he had some massive copper hits last year that brought in Robert Friedland from Ivanhoe. Rob McEwen went in for his third round of financing recently, the billionaire. So when you get guys like Friedland and McEwen behind your story, he was able to raise $49 million as a junior just recently. And I'm really happy to see that, because I met him through Eric Sprott 2 years ago, and he was a different man then, because 2 years ago was a pretty dark time for a lot of juniors.
Yeah, truly. All right, let's shift to silver. Some analysts estimate that above ground silver stocks won't run out until around 2030. That implies 5 more years of increasing deficits for a total of 10 years. Can silver actually run a deficit for a full decade before the reaction function hits the price? Or do you expect markets to front run that several years before the above ground stockpile gets exhausted?
I understand the question. I don't give estimates out that far on silver, gold, anything. 10 years from now, we could have zombies at my front door. Like I have no idea what the market looks like in 10 years. All I can say is that silver is in shortage. The stuff we've read about the manipulation in silver price is very real. I don't talk about that much, but it is real. Silver is a thin commodity for a large commodity, unlike gold, which has a much bigger following, right? So silver will move violently one way or the other. You saw what happened after the April news came out on Liberation Day. Silver took it on the chin. It was down 12 to 13% in 2 sessions. And then, yesterday up 5.3%. This is how silver works. It's not going to, again, come around to your agenda as an investor. You just have to have a position on, and then build a position over time, like I have on dips. Like last year, Gary, just to throw this out there, because I think this will help your listeners. Last year, we were bullish on silver. We bought at 24, 25.01, 27, and 30 on the breakout. And we haven't bought since, because over 30, we want to see it hold 30 for a while, right? And it has. So that's really bullish. So I would consider buying it if it got close to 30 again now. I'd buy at 31 or whatever. So I'm going to keep adding to my position, but I'm doing it methodically.
Very good. Very good. All right. So, John, Treasury Secretary Bissent, he recently stated their new policy is to basically run the economy hot by accelerating growth beyond the rate of debt accumulation to reduce debt to GDP and deficits to GDP. Can they even run it hot? I mean, where will the new growth engine come from? And what are the anticipated impacts if they do run it hot on the precious metals and the broader commodities markets, if they're able to even do that?
Yeah, another good question that I really never thought too much about. I look at a screen 12 hours a day, and I'm looking for trends to develop. And so I think the U.S. has got their back against the wall right now. I don't think it's as rosy as Besant or Trump or any of these guys are talking about. I understand the narrative. I understand why you would talk the book, so to speak. But show me the numbers, right? GDP negative, what was it? Negative 0.2, negative 0.3 last read. That's coming up around June 26th, if I'm not mistaken. That's one to watch, people, because if you get two negative reads on GDP back to back, that historically has signaled a recession going back to 1929. So I'm not calling for a recession yet. I want to see the numbers, but I think this market is suspect right now. I think you're going to have major issues between now and October 31st. Something is going to happen that probably none of us can can put a finger on. But let's just look at the Fed, for a second, because this is part of your question in a way. The Fed drives a lot to me in terms of behavior. May was a nothing burger again, no rate cuts, right? I looked right before we went online together today. There's a 7% chance of a 25 basis point cut June 18th. Okay. That's not happening at this moment. So what would change? Well, we've got non-farm payrolls June 6th. We've got CPI, I think, on the 11th. We've got things that could change that narrative, but let's just assume we get kind of inline readings. Well, then the Fed's not going to cut in June like everyone thought just 3 months ago. So when is the Fed going to cut? Right? That's going to be, I think, one of these major things that people in a euphoric market like this are kind of putting to the side, which is stupid. You have to respect the Fed, even if you don't like them. You have to respect these guys have power, and Trump and the Fed are like this. I mean, this is like a soap opera unfolding in front of the American public, right? So my point is, if something breaks and the Fed doesn't do anything about it, watch for an emergency rate cut sometime, July to December, right? If we get an emergency rate cut, like we saw in 2020 on that Sunday, remember that? A full point cut on a Sunday. That's when I went like this with my chips, Gary. I was like, I'm all in on that Monday morning. I woke up at 4 a.m. Pacific time, pre-market, buying anything I could get in the gold sector because I'm like, this is your all-in moment. There's hardly any times in investing where you get these like really big tells. And so that's something I would watch for as an investor if the Fed shows their hand.
Okay, so you mentioned something before October 31st. Are you thinking like a black swan type event, or are you thinking more along the lines of just a substantial enough economic drop that would push the Fed into action?
Yeah, I'm thinking more of the latter, like a 12 to 20% drop in the S&P and or NASDAQ. 20% is historically like, oh, we're in trouble kind of moment. And at these levels on the S&P, I honestly think you could see that pretty easily. I think it's just a bad earnings season is going to drive people off the bus. I mean, this reminds me a lot of 2000 to 2003 when we had a lot of those companies that were partying coming off the 90s that were just reckless and did a lot of things wrong for shareholders, and also the portfolio managers out there at the various mutual fund and ETF companies, back then mostly mutual funds, were buying the same stuff. If you looked under the hood, everyone bought Intel, everyone bought Cisco, everyone bought the same stuff, and
What
this
we
is
have
what we're
today.
doing right now. I mean,
Yeah.
I'm not saying Nvidia and Apple are bad companies. I'm saying they're overowned, and when something breaks, you're going to watch a lot of pain unfold in the S&P. And that's what worries me, Gary, is that the S&P is a large part of people's retirement plans, whether they know it or not. I mean, they might have something that's called the large cap core fund, but that's basically mimicking the S&P, right?
Yeah.
So there's a lot of tech exposure out there, and that's worked so far. Great 2023, great 2024, but at some point you get a change in behavior, and that's when I think our sector really starts to take off.
It works until it doesn't, right? All right. So, given the ongoing economic decoupling that you were talking about earlier with China, or even an escalating economic war, which could be what we're watching here, and particularly in light of China's consistent export banning of rare earth metals to the U.S., what do you see as the most profound ramifications of that? And are there other critical metals or minerals beyond rare earths that China is exerting this similar type control over that we need to be aware of?
Yeah, great question. We are underweight rare earths going into this new narrative. Like, I have to be honest, I didn't have the exposure that I wanted, but guess what? Like, as a professional, I spent another half hour today just reading about this one company we're thinking about putting a position on. And then I called this broker that has 2 billion under management and got his thinking because he's actually talked to the CEO. And, I'm always fact checking myself. That's what you have to do in life is if you're not 100% certain, go out there and get help. I mean, that's why people need to work with someone like myself, is that this is a tough sector. There's so much to know. And even if you get everything right, then it's the execution of it, right? Like Victoria, the gold this year. Like, I mean, it's just everything was going well for years and years and years until it didn't. And then investors are like, what the heck happened? Like, I mean, what is this? And so things can go wrong. That's why you need to talk to people like myself, fact check yourself, and have a diversified portfolio. I mean, that's the first and foremost thing. Rare earths to me is very interesting. I have not made a ton of money in rare earths over the years because a lot of them have gone bankrupt, Gary. And so you have to watch out. Like a lot of these names in the US were underfunded in previous cycles. Now that's not the case. I'm seeing a lot of big checks being written to like little juniors. I mean, huge checks. And some of the mid tiers and big caps are getting over $100 million checks written. So I think this is a really interesting subsector to look at. I think China has huge dominance here. But when you said the second part of your question, what else do they have dominance in? For us, a huge position where we did get it right has been in tungsten and in antimony. Tungsten is 81% produced in China last year. If you look it up, I mean, this is in writing right now. China has said as of January 1st, 2026, we are not playing ball anymore in tungsten. So you have to figure it out, US and Russia and everyone else. That's pretty amazing. And that's gotten us more interested in US and North American tungsten plays. There's only a few. In Canada, there's Fireweed, FWEDF. When we saw them get a $35 million check from the government in December, we went all in on that stock. I mean, it was amazing that you could still do that for days after the announcement. That's the beauty of the mining sector. It doesn't move like tech. You know, you could have a sandwich and go on vacation and come back and it's still like, up 10% instead of up 50%, where it probably should be, which is why, buying that at 90 cents US in December, that trades at $1.64 today, Gary. So again, we got the move we wanted. It just took 6 months, which is fine. We're patient. We haven't sold a share. Another one that we like, Guardian Metal here in the US, in Nevada. GMTLF in the States, no Canadian ticker. They have a London ticker, which is GMET.L. Oliver's a sharp young guy. He's positioning the website, presentation deck, all of his narrative for a DoD check that Fireweed got, right? He saw what happened there. He's like, I want a piece of that. I'm in the US. I'm in a better jurisdiction in my mind. Then he went and acquired a second Nevada asset this year. Not very dilutive to shareholders. It only cost a couple $1,000,000, I think. And he's got a billionaire backing the stock. He's got a big fund manager in New York City backing the stock that goes on kick all the time. He's got backing, and I think that he will be successful in getting a check this year. The thing that I just interviewed the Nova Minerals team, NBA, for the first time. That interview isn't live yet, so I can't really share too much. But I can just say that these guys have been working with the DoD for 18 months. Like, this isn't something that you just wake up and because Trump is now more supportive, you get a check. It takes a lot of work. So when you see these announcements as an investor, where Fireweed gets 35 million, Guardian's going to get some money, I'm pretty sure. American Tungsten has filed DEMRF with the White House. They've put a 30-page report in front of some senior people there. It's going to take months, right? It's not going to take a week. But the companies that are positioning now will get checks, and then it'll wake investors up to, oh my gosh, I didn't even realize this was possible. Non-dilutive funding, right?
Interesting. All right. I appreciate you sharing all of that. I want to welcome everyone who's tuning into this fantastic interview with John Feneck, founder of Feneck Consulting. It's been an awesome discussion. Before we wrap up with our final set of questions, I just want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join our quickly growing community. Receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the title of the report. Consider upgrading for access to premium content, but even without premium, there's plenty of free content daily. So visit metalsandminers.substack.com to join us and explore. Thanks again for watching this interview. Now, I'm positive you've been enjoying the conversation back and forth that John and I have been having. Please let him know how much you like it by hitting the like and subscribe button and leave a comment below the video. All right, John, before we started taping, we talked about a lightning round. I'm going to ask you to rank a few assets as a buy or a sell. Give it a score of 1 to 100, with 100 being an extreme buy, 1 being an extreme sell. Just give a sentence or two as to why you take that position. We'll try to run through this real quick. If you're not following it, that's fine. All right.
Okay.
On a scale of 1 to 100 right now, is gold a buy or a sell, and why?
I'd say it's a 90 and it's a buy because the chart looks absolutely beautiful. If you pull up a short-term chart, if you pull up a long-term chart, everything is intact.
Gold miners, 1 to 100, and why?
Are those producing gold miners or just gold miners in general? Or
However you want to segregate it.
the producers are more like a 70 to me because GDX and GDXJ are getting a little hot, right? They just broke out to a 5-year high yesterday. We haven't sold any yet, but we're going to be monitoring RSI, which is called Relative Strength Index. We do that and we educate our clients on why that's important. The gold juniors are 100. I mean, this stuff is unbelievably cheap. I mean, a lot of stocks that we track our own are trading at $10 to $20 an ounce in the ground. It's unbelievable.
Okay. Physical silver, 1 to 100, and why?
Well, it is my largest position, as I said, so I should be at 100. I if we were recording this above 35, I'd be at 100, but we're at 34, so I'm going to say 90.
Okay. And only because it's your largest position, or do you actually have, is it the gold to silver ratio? Do you have a specific reason?
Yeah, yeah. So a lot of our position was built many years ago, and then we doubled down in COVID in 2020. Then we doubled down again last year in 2024. We haven't bought any this year. We're just kind of waiting for this breakout above 35, and I wouldn't mind buying that breakout as long as it's significant on good volume. But no, I mean, I think the reason is because I believe that silver is still a precious metal. It's not just industrial like so many people think.
Okay. Silver miners, 1 to 100, and why?
Just like silver, it's a 90 at this recording. It's 100 if we get silver over 35 in a meaningful way. The reason being is that as you pointed out, Gary, the all-in sustaining cost for many of the junior miners is quite high, and so you need a higher silver price to generate more interest in the stocks.
Okay. Copper.
Copper's interesting. Copper hit an all-time high again in 2025, so I'm going to say an 80 on copper. And copper stocks, if that's a follow-up, I'd say are more of a mixed bag, more of like a 60. If you look at COPX, which is the large cap copper ETF equity play, just hasn't done very well. I mean, like copper was cranking and the ETF couldn't catch a bid, and a lot of clients were picking up on this. I'm still scratching my head. I don't follow copper as closely as I do gold, silver, critical minerals, but yeah, we've been putting on copper positions here quite regularly in the last couple of weeks.
Okay. Uranium.
Uranium, I'd say is more of like a 70 right now. Because the chart's intact. If you look at the spot price chart, it is intact, but it had a huge downdraft since the euphoric, first quarter of last year when we were well over 100 for multiple days. I think we topped out around 109, 110, somewhere in there. But now, today's news with Iran building their uranium stockpile drove a lot of names higher, and I think you're going to see a lot more of this under Trump, where we're just not going to put up with people that don't like us building these kind of stockpiles and doing nothing about it.
Yeah. Okay. Oil.
Oil, man, it's kind of like a 50 to me. I'm buying individual oil stocks because I do see the value in owning energy, but oil as a commodity is kind of tricky because a lot of the ETFs throw off K1s, and I don't want a K1. So I kind of feel it could go either way, right? Like if you believe in the Republican narrative and the Trump narrative, clearly oil's 100, right? But I don't see it happening yet. As an investor, I want to see something that gets my attention, a la yesterday's breakout with GDX and J, right? If you weren't in before, which we have been, but if you weren't in, that got your attention, hopefully, right? With oil, if we go to war with the Middle East, you're going to see oil prices go berserk, and so you want to basically be positioned in some oil, some nat gas, but also in the equities because the equities can roar.
The Nasdaq.
Nasdaq for me is a 10. And that's generous. I honestly feel like this is so overvalued right now, and I understand why. But I have zero Nasdaq exposure, and I'm considering shorting it.
Okay. S&P 500.
Same thing at 10,
Okay.
for
Same
the same
reason.
reasons. Nasdaq and S&P are just very overvalued in historic terms.
Okay. Short-term treasuries.
Short-term treasuries are interesting. I mean, again, we're not interested in 4, 6, 8, 10% returns. Like, but we keep money in short-term treasuries as a alternative to straight cash. So, I mean, probably a 70 or an 80, short-term
Okay.
treasuries.
And long-term treasuries.
Yeah, we're not looking for any type of duration risk right now. I would say probably more like a 10 or 20. And I would also caveat that by saying I'm more of an equity guy, so you're probably asking the wrong guy.
Fair enough. All right. One on a scale of 1 to 10, each representing a percentage, where do you see inflation ending the year using the government stats?
So you're asking for
I will,
inflation.
yeah, if we're sitting around 2.5 now, where do you see us ending 2025?
Okay. Yeah, it's hard. I mean, I really don't do stuff more than 3 months out, because I'm looking at the near term all the time to drive decisions. I'm not one of those guys who looks 6 to 12 months out for much of anything. But if I were to guess, inflation is definitely going up in a tariff filled world. So I mean, maybe an 8.
Oh, wow. You see it going up a lot.
It could potentially go up a lot because we haven't, like, look at what happened since Liberation Day. That was April 2nd, right? This is literally 2 months ago to the day almost. We don't have an idea of how this is going to impact
No, we have
anything
no
right now,
idea.
right?
Yeah.
So, like, to say, oh, it's only going to go up 0.3%. I mean, how do I know?
Yeah.
I think it's going to go well above 3. I think the Fed is then going to be faced with like dealing with it, and a la my scenario of, if you get a big rate cut on a scheduled day or an emergency rate cut, you should be buying a lot of our sector because that's very bullish for us.
Okay. 1 to 10 probability we will have a recession before the end of this year.
Um, I'd say in terms of a recession, it's a 6 or a 7 for me. In terms of a correction, like a traditional 10 or 15%er, it's a 10.
Okay. All right, John, would you please share a key takeaway that you want viewers to keep in mind about today's economic market and monetary situation, and then let everybody know where they can learn more about your work and how they can connect with you?
Yeah, I mean, don't don't take your financial advisor's words for granted. Look at a chart. Go back to your 401k and draw a chart of your personal 401k from March of '09 to now. And you should be thanking God for the money you've made, because a lot of that money is not you. It's luck. And you have to be able to realize this and say, let me take some risk off the table and buy some assets that zig when the market zags, right? And that's us, gold, silver, and related. Like, that is where you want to be putting money first and foremost. I think the critical minerals sector is extremely interesting with all this stuff going on with China and with Trump. I mean, coming out and basically saying in March and April, hey, put all this stuff on my desk within 10 days, man. I love it. It's like someone actually taking some action and saying, holy cow, we're getting creamed here, guys. Let's step up, right? Like, this is really bullish for owning critical mineral stocks right here. So, you know, question your financial advisor, and if you don't have one, you got to align with people like myself and a few others that can help you along the way, because doing this by yourself is a losing proposition. Where you can find more stuff is fennecconsulting.com. We have a number of services there, but our bread and butter is our real-time email service, where we, email people every day about this very stuff that we're talking about, whether it's equities or metals or macroeconomic stuff. It's a lot of work. We're one of 2 services in the U.S. that does this, and that's for a reason. But I enjoy helping people, and I just got off doing 2 conferences. We had about 120, 130 investors there. All of them were accredited. All of them were buying stock, and man, doing that a month ago was really timely, just by luck. So.
Well, that's exciting. I will have your information up on the screen. They'll also be able to find it in the description area. They can click right through over to you. I encourage everybody who's listening, please go click through, check out John's work. It's very spectacular work. I think you'll really like what he has to share. John, thanks for coming on to Metals and Miners, for being so generous with your time, analysis, and ideas. It's always awesome to catch up with you. I look forward to having you back on sometime soon. And everybody else, thank you for watching.
Thanks, Gary.
I want to welcome everyone who's tuning into this fantastic interview with John Feneck, founder of Feneck Consulting. It's been an awesome discussion. Before we wrap up with our final set of questions, I just want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join our quickly growing community. Receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the title of the report.